Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million in revenue and beyond. And we work only in information technology and IT-enabled services. In support of our mission, we have done these free mentoring roundtables for many years. Starting in the fall of 2008, we have now done over 500 sessions and over 150,000 people have participated in them. It's been a fascinating journey, really, traveling around the world with entrepreneurs from everywhere. And we've learned a lot. We've had an opportunity to contribute to the global entrepreneurship ecosystem. This event is being recorded. You will find recordings of every single one of our roundtables on our YouTube channel, 1M1M Roundtables. On Twitter, we're at 1Mby1M and at Sramana. You're very welcome to follow if you're not already doing so. We publish a lot of interesting content. You can learn a lot by following that channel. If you're live tweeting the show today, use hashtag 1M1M. This is a roundtable, not a broadcast, so we want you to participate. These are the call-in numbers. I'll put the slide back up a little bit later after we're done with the scheduled programming. We have some scheduled programming first. We are going to start today's session with a conversation with Vishesh Rajaram, Managing Partner of Speciale Invest. Vishesh, welcome to the show.
Thank you, Sramana. Pleasure to be here.
All right, well, let's get acquainted. Tell us a bit about your background as well as about your fund.
So we're a seed stage fund investing in enterprise software and industrial hardware. The fund's been in existence for the last 4 years. Our first fund, the $10 million fund with a 2017 vintage, and we're now in the middle of raising our second fund. First fund, we made about 12 investments to date. We've got a couple of good exits along the way. We possibly are about 75% through. We're going to begin investing from our second fund early next year. The kind of companies we typically work sort of fall under software and hardware buckets, and over the course of this conversation, I'd be happy to talk more about that. Personally, in my own background, I've been in the venture business now for the last 15 years, prior to which I was an entrepreneur and had my early career in financial services.
So talk a little bit about one stage and two geography. What do you mean by stage? So let's say in enterprise software, what are you looking for before you're willing to write a check?
Excellent question. We operate in a round of financing of $500,000 or less, which by definition is sort of pre-seed or seed, which essentially means you're talking of companies which have vintage of less than a few hundred days old. These are founders who've got an idea, who've got an insight, and we're essentially looking for founders having a founder market fit with the sort of product they want to build, and their desire to build a company or build a product out of deep insights that is reasonably unique. So by definition, we're mostly pre-revenue, we're pre-profits, and in most cases, we're pre-product.
Okay. And what about geography?
Geography, we're an India domiciled fund, so we have a little over 2/3 of our money sitting in India, and we make cross-border investments as well from time to time. So we're open to investing in the U.S. and in India. We have active investments in both geographies.
And when you invest in the U.S., I presume you are looking for companies that are going after the U.S. market, but with an Indian back end.
That's absolutely right.
Yeah. Okay. Now, you said from your last fund, you've made 12 investments and you've had a couple of exits. Actually, that would be a very good segue into where I'm going to go next. But let's actually talk about the 2 exits you had already. Talk about what they were doing, at what stage, and with what did they come to you that propelled you to write the checks. and what was the nature of the exit?
Sure. So first one was a gaming company. We invested in a company primarily because we were quite excited about the team and their insights to build a gaming engine ground up and fairly strong layers of cryptography, and they were essentially building an online poker platform. We invested in this company back in 2018. In a couple of years, I think the business scaled a little over 7 to 10x. This was an M&A offer by another large gaming company that wanted to buy into the sector, buy into the gaming base, and sort of acquire the company. So
and that was an American
it's not
company
natural
that
for
bought
us
the
to see.
company?
It's not very natural for us to see an exit that early, but I think it was the best thing to do to align with a strategic partner to sort of enhance distribution and market penetration, and that's the reason we sort of played along with the founder's decision to go sell the company.
Was it an American company that bought the?
It was an Indian company that bought it. It was actually in a local M&A.
I see, it was local M&A, okay. And what is the second one? What sector and what kind of
Well,
dynamic?
the second one, I'm not going to name too much of it because the acquirer is a listed company, but this is a company that was developing tools to enable developing 3D AR and VR content for e-commerce, and we got acquired by a large retail and commerce group.
Also in India?
No, this is also in India, but part of a global group.
So, what is your fund's investment thesis? Are you looking for unicorns, or are you trying to proactively go after these kinds of early exit opportunities? And I'll tell you where I'm coming from. In our conversations with investors, we see two distinct categories. One is the traditional venture capital world that is sticking to the traditional venture capital philosophy of chasing unicorns, going after billion-dollar plus market opportunities, and looking to go the full length. And then there are small funds. There are a lot of small funds now. In the last 5 years, there are probably 1,000 plus small funds that have come about, seed funds, and they have various different positioning: pre-seed, seed, post-seed, pre-series A, small series A, all kinds of different segmentation that has gone on. There is a category of investors that are categorically going after small exits, small but quick exits. So you put in money, and within 2-3 years, you basically exit with a smaller exit, but it's a good multiple anyway. What is your fund's investment thesis?
So I think the fund's investment thesis is clearly long only. We're essentially getting to companies to sort of build value over 4 to 6, 7 year time frame. The couple of them that we've got in are early. They're half opportunistic, and we've sort of played along with what the founders wanted to do in these companies. So I think by and large, in a portfolio of 18, 20 companies, you're going to have a mixed bag. You'll have a few that you get out early. You'll have a few that you lose, and you'll have a few that sort of build along the way. And I think we're no different in how we're thinking about constructing our portfolio. Got it.
Can you talk a bit about your analysis of exits in India, both local acquirers as well as international acquirers, and in two separate segments perhaps?
Yeah, I think I'll have to break that down into a couple of sectors. I think we'll talk about commerce and consumption in one, and generally enterprise and technology in the other. I think companies that sort of fall in the commerce and consumption bucket clearly have had an early run. You had companies building products in that vertical about 10 to 12 years ago, and hence we've seen a variety of acquisitions, both local and international. We've also seen that international are generally more enriching than local acquisitions, but we've seen a fair amount of activity on both those sides. We now have double-digit unicorns in the country, and they've all sort of also been reasonably inorganic in the later part of their growth. As far as companies on the enterprise tech, the local acquisition opportunity is less in numbers than it is for consumption, and that's largely because a lot of the potential acquirers or players with synergies are largely in U.S. and possibly in Europe. So in those categories, you're not seeing as many exits as you have in consumption. That's largely because you've got lesser companies, and there's a little bit of a lag in when these companies started and at what point of time they're becoming mature and growing. And I think you'll begin to see some of them. Some of them are happening now. And there, I think we'll see a lot more overseas acquisitions than just local M&A.
And what about companies that are uniquely Indian? There is the, enterprise software that is facing the global market. There's the e-commerce and, the payments and that whole general e-commerce, digital commerce world of Paytm and so on. That's India facing. What about categories or styles of companies that are uniquely Indian? Is that on your radar? Are you observing those?
Well, if they are on the enterprise side, possibly will be in our radar. But our read of the market is that the Indian enterprise market is still a little early. And you break down enterprises, large enterprises, SMB and mid markets. I think the SMB market and their ability to pay is still very early in the Indian market. So it means we're seeing a few companies going after them and sort of going after modern trade or kirana stores and building technology stacks for them. But the monetization and mannerisms to make money is still very early.
Slow. The main issue with this is the buying cycle is so slow and it requires such high touch that it's not profitable to sell to that category. Yeah.
Yeah, the ACVs are also low. The propensity to pay is low. The value creation out of tech, order of magnitude lower than what it possibly is in Western markets. But it's early days, and I think in a few years from now we'll think very differently about it.
But what about what is your analysis of fintech, for instance, or healthcare, which are kind of big open problems for India, right? There's such little service available in general.
Yeah, I think they're both very different in their own ways. I mean, fintech. I mean, there's a large unbanked population in the country that everybody talks about, and everybody talks about how going digital and using digital wallets and using digital mechanisms to borrow, lend, and invest money. And there are a few companies that have come out and built very large base of customers and large value. The one thing to remember, however, is that fintech is a thin margin business, and you generally have to build scale and stickiness, and that's what's very key to sort of surviving in the long run. Where I think we've seen companies be very successful are the ones where they're essentially building payment platforms that support businesses to have recurring transactions, where essentially you're able to get into a company and have repeat income or SaaS-like revenues coming out of it. It's a lot more harder to make that kind of money on just retail and payments, because there the CAC and the LTVs don't often sustain in the short to medium run. Talking about healthcare, I think there's a lot of action that we're going to see out there. It's still very, very early days as far as is concerned. I mean, the whole digital EHR or EMR infrastructure is almost non-existent at this point of time, and then I'm sure a few companies are already sort of looking to build those stacks, and there's just a lot of scope for digitization and benefiting of that data science and the intelligence coming out of that kind of data for better healthcare.
Yeah.
We're not even scratching the surface as far as that is concerned. Of course, fintech is a little ahead. You've got a few companies that have gotten in the game early and building up. I think healthcare is still pretty much an open game to play.
Yeah. From the audience, Sridhar Raj is saying, congrats on the Scapic exit. That is a great start. Is it not? Does Sramana know? Would you like to speak about that?
Sorry, I didn't get the second part of what it was.
You have an audience question who's congratulating you on a Scapic exit and asking for more discussion on that topic.
Yeah, that was our second exit. As it is in the news, Flipkart acquired the company, and we're very happy for them and their future.
So I was actually going to go somewhere else with my question about one of your portfolio companies. Pick one that is an enterprise software company that you feel strongly about, that you think is going to be a full-scale venture-style company. and talk about
Wingman.
Sorry?
This is a company called Wingman.
Okay. Wingman?
Yeah.
Go ahead and talk about that. When did you find them? How did you find them, or how did they find you? And what did you see in them in the beginning? Where are they now? What are they doing? And what is their trajectory?
Sure. So, Wingman's a company that was founded by 3 entrepreneurs. One who'd sort of been part of an acquisition that got acquired by Google, spent time at Google, Amazon, another founder with sort of Amazon Uber, and the third founder sort of worked in an IP venture fund and worked at Goldman Sachs. And 2 out of 3 of them were in the U.S., and they moved back into India to sort of set up a company ground up. And they had reasonable expertise in building AI models from just the backgrounds of the large companies that they worked. And one of the sweet spots they picked up was the convergence of voice and AI. And they've gone out to build a sales intelligence product that listens into conversations between sales and customers and helps increase sales efficiency, which in other words essentially helps you prioritize sales pipeline based on intelligence coming out of customer conversations and helps you do more sales. It's sort of similar to a couple of other companies called Gong and Chorus, both Israeli U.S. companies that are done fairly well. And Wingman then went to Y Combinator, and they're now out and they're going fairly well.
And is the conversation listening happening in a way that it's attached to a telephone line, or how is the conversation being recorded and processed?
Good question. I think this is a company that's sort of targeting a segment called inside sales, which is largely SaaS companies selling products to other companies. So they're essentially salespeople using dialers or using Zoom or using other form of conferencing tools to talk to customers.
And does that mean that you're integrating with those tools? Absolutely. So this is one of the areas that we are very bullish about is, there are a lot of platforms out there right now, SaaS platforms, that are kind of deeply entrenched into enterprise workflow and have lots of enterprise customers. The one that you were talking about is, going after customers that already are deeply entrenched in Zoom, for example. Maybe they're entrenched in Ring Central, and there's a whole bunch of technologies that are already entrenched. And to what extent is a company like this that you are working with leveraging that deep penetration of another platform? So, how close is the partnership with Zoom, for example? How close is the partnership with Ring Central? Is there one?
So a lot of these companies essentially build on top of distribution of some of these in terms of integrations and operate on top of the marketplaces. Companies like Zoom and a bunch of other dialer companies are now fairly standardized. In a few cases, you have API access that allows you to sort of, pick and leverage the pipeline of data that's already being provided.
Are you seeing benefits of marketplaces?
Oh, absolutely. In almost all, most of our SaaS companies, we see big benefits of, being on top of marketplaces that have a distribution base, that have API plugins that allow you to sort of integrate and expand fairly quickly.
And which marketplaces are yielding the most effectively in this case?
Well, I think it's very case specific, right? We have another company called TrueLock that's a conversational AI company that's in the wellness industry. So they're on the MindBody marketplace, for example, and MindBody, as you may know, is a large software product company that's in the wellness space, and hence already has market access and a customer base that's looking for other apps to integrate and benefit off. And we've got another one.
The one that you were talking about, which marketplace is that getting the maximum benefit from?
Well, they're not necessarily a marketplace. They're integrating into a bunch of different CRMs and dialers. You don't have to be in the marketplace. So they're not
getting marketplace effects yet?
Not yet.
So that's kind of what I was, pointing to, is that the platforms kind of need to go more aggressively towards these marketplaces. They're not quite there yet. There are there are more APIs to integrate than marketplaces at the moment. There are a lot of APIs, and plus there are these individual API companies like MuleSoft and SnapLogic and so on, Postman, which you can integrate through. But what is lacking actually is fully thought through marketplaces. I mean, Salesforce's App Exchange built a lot of companies and their pipelines. That effect is still fairly, there are some, like Atlassian, I think is a very nice marketplace. If you have companies that can, ride on top of that marketplace, that would be a good one where you can actually get marketplace impact in the distribution. But Shopify has it, but not as many yet. That's kind of where I was going, and I was just checking to see if you are seeing something different than what I was seeing. Okay. Is there any other companies in your portfolio or any other trends in your work that you would like to discuss before we go to entrepreneur pitches?
Well, I think we've done a host of things on the hardware side. We have a company in the robotics space called Seinler. Essentially are building vision and brain intelligence on top of robotic arms to behave more like human hands. And that's an exciting space. We've seen a few companies in the US sort of building very similar tech, and we're quite excited about the future for them.
What do you do when you get a company like that? Because in the early stages, those kinds of companies take time to build their products. So when do you come in? With what are you looking for before you're willing to come in?
Yeah, the first thing you do is you pick up the phone and you call potential customers in your network and you try and ask them if they need a solution like this. I mean, specific to this company, it's in the industrial automation space. So you essentially want to know if there is a need and an ROI for someone in that vertical, in that category, to even be building such a product, right? And then what you then try and do is find a few early customers that you want to evangelize, start talking about what they're looking for in the product, and then you build your initial customer profile and start building prototypes that solve the problem. And then you pick up and run, because, I mean, you can't go and build solutions unless you know what customers really want.
So you're not expecting that to happen before you come in?
Well, that's part of our due diligence to sort of go validate the market need and some of that. We clearly don't expect companies to have products assigned customers before we come in, right? Or, like I said, a seed fund, so we come in very early. But the whole idea is that part of our due diligence is to validate the need for the tech.
Doesn't mean that a lot of seed funds want to see revenue already. There's a very large number of seed funds who already want to see revenues, which is why we ask this question: what is your definition of seed? And
yeah, I think revenue is a bonus, but we're looking for smart entrepreneurs with insights to be building products that are not easy to build.
Good. Very good. All right, well, let's switch to some entrepreneur pitches.
Lovely. Thank you so much for having me around. I'll try and stay on and listen in, but great to be here otherwise.
Great. Folks, let me set expectations a little bit before we start the entrepreneur pitches. This is a safe working session. We have no other agenda besides looking at your situation and brainstorming about how to remove your roadblocks and accelerate your journey. This is not Shark Tank. This is not TV ratings and entertainment. This is a working session. If you disagree with the feedback you get here, that's fine. It's your venture. You will play your hand the way you wish to. What we're going to do is give you direct, candid feedback. You can do whatever you want with that feedback. Remember one thing, not all businesses can raise money, not all businesses should raise money, and raising money doesn't guarantee success. So Sunali Aggarwal from Chandigarh, India. Please unmute your line, Sunali, and tell us what you're working on.
Yeah, hi, Sramana. Pleasure to be here. And hopefully I managed to get some feedback from you regarding our venture.
Sure.
Just a little bit of background about me. I'm a UX designer by education and by profession, and I've been so for 17 years now. I've had startups in the past, and most startups were bootstrapped. Couple of them did well. We were always profitable. One didn't do so well. And the problem that I bring to you today is about bootstrapping versus funding for our particular project. So we are As You Are, that's AYA. We are an LGBTQ matchmaking platform. And that's how we are kind of pitching ourselves to the customers.
For India?
For India, for the Indian audience. So in India, the LGBTQ population is almost double of the population of UK. It's a big market. And of this entire population, only 5 to 6% people come out, and 95% are closeted. So the way LGBTQ dating works is very different from the way straight dating works. So you cannot take a straightforward Tinder template and apply it to the LGBTQ space. All the apps that are there in the current space are international. They follow their international standards and their international way of operating LGBTQ matchmaking or dating in this sector. So far, there have been other apps, but they've not had success. Most apps do not have a verification process, or their verification process is very weak. So LGBTQ community feels very vulnerable on these apps, and there have been many issues also reported in media and other places of harassment and bullying on dating apps. So we've kept a very strict verification process. Every member has to submit a selfie. We manually check the selfie vis-a-vis their data that they submitted, and we accept or reject based on that. Unverified users cannot do much on the app, unlike other apps where they can go and browse people, they can look at their profiles, they can send messages to them. On our platform, unverified users cannot do much, so they have to get verified. In the long run, the vision that we have, besides delivering regional content or the service in regional languages, we also want it open for LGBTQ community across the world, Indians across the world rather. And we want to operate like a matchmaking service where you can find a life partner vis-a-vis a hookup or a dating service. Just giving you another fact, most 56% of LGBTQ singles find their partners online. So online is the space where they actually go and find people. And in India, this trend is now picking up even more. This 56% is a number that I've got globally. And because India has not had any formal survey, so we don't know the exact numbers here. But the market in itself is growing really fast. The dating market is growing really fast in India. Our target customer is about from 25 to 65 years of age. They are in tier 1 and tier 2 cities. They're financially independent, and we're targeting all genders. We would expect them to be graduates because at some point we want them to pay. So, financial independence and education matters. And typically the customers that we have, they have mid-range mobile phones like Xiaomi and Vivo, and we expect the segment that we are going for is people who have Netflix or Disney Hotstar, so that's the segment that we are trying to target. On an average, a dating app kind of charges about $8.28 per month, and we intend to charge lesser than that to begin with, just to get the traction in. Next slide, please.
Sunali, before we go to the next slide, I have a question for you.
Yeah.
Segmentation that you just provided, which I like very much, that you're very precise in where you want to target your app. And I agree with your segmentation. Now, if you apply that segmentation to the broad numbers that you've quoted here, 13.5 crore, 84 lakhs, what does it do to your target?
So it shrinks the target market by, let's say, 1/20th. Okay, so we are looking at maybe 3 crore people, 4 crore people. Okay,
3 crore, 4 crore, okay.
Okay, but the idea is that initial stages when we're going out and selling the product, we cannot target everyone because we can't spread ourselves so thin. So we know that the number is large, but that has to be acquired over a period of time. And how do you start acquiring if you do not have a target audience to begin with, right? So hence this market segmentation that we've done, when we've targeted in this segmentation, it has worked for us.
So, I mean, this sounds like big numbers still. Even in the segment that you're talking about, it still sounds like a very big number. Are you sure about these numbers?
Yes. So, okay, let me give you a background of the numbers. So, in the US, when certain surveys were done, 20 out of 100 people were LGBTQ. In India, the formal survey has not been done, but the Supreme Court has given a figure of about 8 crore. It is what we've realized over a period of time with our research that at least 10 out of 100 individuals are LGBTQ. So if we just apply that 10 out of 100 figure to the Indian population, that gives us a figure of about 13.5.
What about if you apply the Supreme Court figure of 8 crore?
So if we apply, even then we have a decent market size to begin with, Sramana, because if you look at the way other companies are monetizing their products, they are targeting about 10 million people, which is about a crore, you know. And of that crore, they're making most of their revenue. So we have a large number to target. And, you know, we do not know whether those figures are actually correct because those figures are also submitted by a third party, right? Okay. And if so there is an ambiguity in terms of what is the right figure, but the conservative estimate is 10 out of 100. You know, if you look at it from our perspective.
Next question: are we talking about a site that is or an app that is already out there, or are you talking pure concept right now?
No, the app is already there. We've already started acquiring customers. We've had more than 5,900 downloads already. We have 250 active users, daily active users on the app.
Okay. And where are these? What city are you seeing this action in?
Both tier 1, tier 2. So we are looking at metro cities and also tier 2 cities.
And
so like Chandigarh is a tier 2 city.
Just your search or something else?
Sorry?
Where are they finding you from? Your app
search? This is what we've done so far, Sramana. This is what has worked for us. So purely one search model has worked, an application search optimization has worked. We need to invest more in content marketing because this whenever we do a little bit of content marketing, that works for us. Of this list, what has worked is community relationships and public relation activities the most. We're still working on the user referral network. Like, you know, you join the app, bring your friend with you, and we'll give you a free premium plan or something, you know, where we're trying to award the user for their work. And we believe that will work very well with the user. So these are the areas that we want to work on in terms of, if you say what is our marketing focus, this would be our marketing focus. These areas would be our marketing focus. So what we've seen is offline events do not get you as much traction as staying online. Like I said, a lot of people are closeted, they don't come out, they don't participate in offline events, and they are rather comfortable looking for such apps online.
Yeah, that doesn't surprise me at all. In a place like India, with all the taboo and everything, the fact that people will be more comfortable online. So your customer acquisition is going to be online, is my guess. Now, nobody's paying yet, right? Everybody is using your app for free?
Right now, the model is free. In fact, tomorrow we are launching our premium plan, which is a paid plan. And we'll also have a free use plan. A free use plan will get you visibility within your city. But if you want to interact with people outside of your city, then you'll have to opt for a premium plan. There are also other features that push you to buy a premium plan, but a free user can also use it, pretty well. So the discussion that I wanted to kind of have with you is that, in the past when I've had startups, I have bootstrapped them. and we've had fair amount of success, but not scale. So the scale story is something that I've still not addressed with any of my startups.
Right. So let me rephrase this question for you, and it may help you think about the issue of funding versus bootstrapping in a more realistic way. Do you have, right now, given your hand of cards and given the stage you're in, do you have the option of raising money, or do you have to bootstrap? My assessment for the moment is that
I have
to.
Right. I have both options in front.
I was going to say that I think at the moment it would be difficult to attract investors until you can show a few things. And those things are, can you grow really quickly? Let's say you put in money, but do you understand enough of what is your customer acquisition strategy and cost? And so if you put in, $1 million, what is that going to produce on the other end? How fast is it going to grow? What are going to be the numbers? What are going to be the numbers by way of free acquisitions? What is going to be the number by way of conversion? And my assessment of what's happening in consumer businesses, B2C businesses, which yours is for sure, is that people want to see some of that, deterministic path to how the money is going to multiply, or how the money is going to, impact. And if you can go in with those calculations, that would be a situation where you can raise money. But I think there needs to be work to get there. That's where you're going to get into some issues about fundability at the moment, is my assessment.
Okay. And what particularly do you think is the issue?
The issue is user acquisition, active users, and then, paying, monetization, what percentage monetizes, and, what is the strategy to get the kind of users who would monetize?
Right.
And what is the mathematics? What is the unit economics of that? How much are you spending to acquire these guys, and how much are you making of them? What is the customer lifetime value? And you won't have all these answers in short order, because these kinds of businesses take time to build. And more often than not, I've seen, I remember, and this was a long time ago, it must have been mid-2000s, 2005, 6, around that time frame. I was sitting in the office of Sequoia Capital here in California and talking to one of their partners, and we were talking about YouTube, which was really going gangbusters at the point, and YouTube had been acquired by Google, I think, already. And he was telling me that, we invested in YouTube, but YouTube already had, 1 million plus users. And that's when we invested in YouTube, because we saw this thing going viral and going, crazy. So we already saw the massive adoption happening, and then we knew how to monetize that one with ads. So it was not such a big deal to see if the growth, if the user growth sustains, then we knew that we had something big in our hands. And this is kind of like the point of view that you will hear a lot in B2C investment. It was the same with WhatsApp. It was the same with Instagram. It was the same with Facebook. They were all showing massive virality and massive growth in user base. So in your case, I think, in the segment of educated, affluent, LGBTQ that you are going after, the likelihood that they would pay for a matchmaking service is reasonable. What percentage conversion you would get from free to premium is a bit of a question mark, but you could at least proxy that by checking how much do other matrimonial services, how do other matrimonial services do by way of free to premium conversion, and put that assumption. But at the minimum, you're going to have to show the, massive viral growth rate.
Right. But don't you think comparing that with a straight matrimony site would also be misleading?
It could be. It could be misleading. The question is
those
in your favor or against you?
No, I think it's favorable. It's not against because the India matrimony space is quite big. I don't think that anything would go against. The numbers might not go against. In fact, even just the dating numbers are not against us at all. So if you look at the conversion rates, they're pretty high in some of the apps.
So what is the range? If you look at the range of conversion numbers, what is the range?
So typically the range that we know of is about 50%.
50%?
Yes. And that too, but that's what I'm saying. It's a combined figure of straight and other LGBTQ apps. So figures individually are not available.
So there are other LGBTQ apps that have gone far enough to show numbers?
There are apps like Grindr. But again, they are very male-dominated apps. Like Grindr is extremely male-dominated.
How many users does Grindr have?
Sorry?
How many users does active users?
I don't have that handy with me, Sramana. I don't want to give you a wrong figure.
But do you have a sense? Is this millions of users? Or
yes, it is close to million. But I'm to be honest, I'm not very sure of that number.
Okay. Well, so I think that's where I'm going to leave you. I think the more you can show that you will be able to, you have some formula figured out of how people are going to find you, and you're going to find people to bring them onto the site. And if there is, demonstrated virality in that process, those are the things that people look for in consumer sites. But the one thing that you have in your favor is if it really is 50% conversion, then your threshold of what you need to show is much lower than a consumer app that monetizes by advertising, for example. Because anything that monetizes by advertising is the bar is much higher. You need millions of users before anybody is going to take it seriously. Whereas if you're monetizing at a 50% conversion rate, that's a much lower number that you have to get to.
Yes. The numbers, in fact, we were doing some number crunching at our end. So even though the market size is so high, we don't need such high numbers to be very profitable, right?
It's not a question of profitability. The question of what investors are looking for is to go from $0 to $100 million in 5 to 7 years.
Right.
They don't care about profitability as much. So in convincing investors, you have to show them how do you go from $0 to $100 million in 5 to 7 years in revenue.
Right. Okay. Yeah. Thank you. Thanks for your time and your feedback.
You're welcome.
Okay.
I don't see.
There are some questions in the chat window.
You can dialogue in the chat. I think Sridhar Raj is asking you a bunch of questions, so you can dialogue with him. He seems to be very interested in your business, so feel free to dialogue with him in the public chat, Sunali.
Okay. All right. Thank you.
You're welcome. There is another presentation here from California, and this seems like the person is not here yet, at least. So I'm going to go explain to you how to use 1M, and then we'll go straight to audience Q&A. 1 second. Wow, that's a big presentation of the no-show guy. If you like what we're doing here, which is we give very candid feedback. You don't come here to get a pat on your back. You come here to get straightforward feedback with which you can actually do something. And if you like that approach, and a lot of people do and some don't, do feel free to refer 1 million by 1 million to your friends and colleagues who are doing startups and need help. Resources-wise, you'll find everything at 1Mby1M.com. There's a terrific blog that a lot of companies, a lot of entrepreneurs have used to learn. In fact, these days I actually get pitched to do stories on entrepreneurs who've been following this blog, and in particular the Entrepreneur Journeys blog series of, where I profile entrepreneurs for a long time, 10, 12 years, and have, taken the lessons and built sizable companies, and that's really rewarding for me to see. The Entrepreneur Journeys book series is built on that blog series, and we have a dozen of those. You can dig down on a particular topic. So one category we see a lot of activity in our community is bootstrapping with a paycheck. So there are a lot of entrepreneurs who are starting while holding on to their jobs. And we may be the only accelerator out there who's going to work with you if you are doing that. Bootstrapping using service is also a controversial topic. A lot of accelerators don't like bootstrapping using services. We do, and we do have a lot of entrepreneurs in our community who bootstrap using services. These roundtables happen every week, so you're very welcome to come as many times as you want. You can pitch once for free. To pitch multiple times, you're going to need to be part of the premium program, but you're very welcome to come to the free roundtables as many times as you want. The full acceleration program from our platform is 1M by1M Premium. You can get extensive methodology guidance. You can access our curriculum, which is many hundred hours worth of curriculum. We help you with business development. Our network, which is one of the most powerful networks in the startup universe and in the technology industry, is available to you if you join the premium program. We do help you with strategy consulting. The same thing as what we're doing here in these roundtables. We have private versions of that on a weekly basis for our premium members. We do help you with financing, and we help you with media relations. We have a great network of several hundred investors who work with us on a continuous basis and look at our deals and so on. So if you are part of the premium program, you do have access to the financing network as well. I suggest you go to self-assessment on the 1M by1M site and look at this questionnaire. This is a due diligence questionnaire that investors would use. This is a strategic planning questionnaire that entrepreneurs would use, and it's available for free. Try to answer these questions about your strategy. And if you get stuck and you need methodology training, you can go to 1M by1M Basic and start accessing the curriculum and learning and plugging your methodology gaps. In any case, you can spend time on the website and try to learn, how our various programs work, premium, basic, etc. There are FAQs, video FAQs, a full description of the curriculum. It is a case study-based curriculum. We have hundreds of case studies of successful entrepreneurs, 100+ unicorns, 400+ venture-funded companies, another 400+ bootstrap companies. Our methodology is lean, capital-efficient bootstrap startups. We want you to do some validation. This, what we were talking about earlier with Vishesh about calling up customers and knowing whether they will buy your product or not, whether your product is built or not. That level of validation is really important, and we stress extensively on that kind of work, and we open our Rolodex to you so that you can do that early on if you want. But the philosophy is bootstrap first, raise money later, which is what I was guiding Sunali on as well. That's it. I think we have 3 more roundtables this year. Next week is off for Thanksgiving, and then we have 3 more in December. We also have free rendezvous, online rendezvous on Facebook, Twitter, and LinkedIn Live. That's we have 1 more next week and then 4 more in December. You're very welcome to catch me there. And that's it. If anybody has any further questions, I'll be happy to tackle. Now, let me also introduce you to Irina Patterson on our team, who will answer questions about the 1M program. And that's it. You're very welcome, Sunali. Good luck. Anybody else? Any other questions, comments? Anybody? Would anybody like to dial in and ask questions or dialogue on any topic? All right. It looks like we have covered everything and everybody's questions. So we will adjourn and we will see you after Thanksgiving, the week after Thanksgiving. Thank you very much for coming today. See you soon. Bye-bye. I imagine Vishesh has already dropped off. So in any case, Vishesh, if you're still on, goodbye. Thank you for coming today.